It's 18 units, great bed count, 12 twos, 6 ones, some capital improvements in windows, the roof, coin operated laundry has some lift, and then you can see the parking situation there. So 24 spots. So that one's just going through the due diligence phase, but excited to see how it unfolds, and tons of lift in every unit through renovations and rent, and a very, very nice little pocket here in Clinton.
Hello. Welcome to the Canadian Real Estate Channel. My name is Adriana Ostapenko. I'm here with Abdellah today.
Good.
Myself, I'm the owner of Ace Properties, an asset management company. We have about 130 units under management right now, 30 plus which are in development. We are operating out east in New Brunswick mostly, but expanding to new markets as well. I'm also very passionate about giving others the opportunity to build wealth in real estate, as well as inspire and educate them. So it's such a pleasure to be here with you. You are going to be diving into the Hamilton market. It was my first market of investment, so I have a special place in my heart for it. We still own properties in Hamilton, so I can't wait to dive in with you on that market.
Yeah, awesome. Thank you, Adriana. Nice to meet, and love to hear your investment journey. That's a great accumulation of properties, and just so nice to hear of other people doing these grand things on the investment side. But let me add, we're obviously starting in Hamilton. Do you mind telling me where your first few were in the city?
In the city, so King Street, 557 King Street was our very first property. We bought a single family, converted into a legal fourplex there. I stuck to the RT zoning that came out. First property was bought back in 2018.
Nice. And on where is that exactly on King?
557.
Yeah. Is that that's got to be Gage and Sherman area?
So right near Gage, yes.
Yeah. Awesome. Yeah, I love those. A lot of 2.5 story.
Yes.
On the stretch there,
attic
right?
Space with a fourth unit. Yes.
Yeah, that's awesome. A great way to intensify. So yeah, I'm super happy to be back. Kind of took December off just to kind of recharge, and then we got a great presentation ahead. Going to dive into, just like we've kind of been doing the last couple episodes, dive into more of the nitty-gritty stats, and talk about where sales activity is. And now being in January of 2023, we can talk about how all of 2022 looked like as a whole, and where it ended in terms of the median pricing in Hamilton as well. We're going to dive into rents, just because we do an incredible amount of leasing, just naturally with the amount of investors that we have the pleasure of working with here in Hamilton. So, going to do something a little bit different, and just kind of look at it from a regular standpoint now that we have, these entry points that are at X and these exits at X, and we're at a leveling period here in Hamilton where there's not too much discrepancy anymore, where, over the course of 2022, we obviously saw some violent regression, and you can really get a good grasp of where the exits were, right? Which obviously could make or break a deal. So we'll touch on that as well. So but if you're ready, Adriana, I'm ready to dive into the the presentation.
Yeah, let's do it. While you're opening up, I'm curious so are you mostly focused on investors, and what type of properties do you normally transact in?
Yeah, no, appreciate the question. So yes, I mean, our sales team deals with everything, just like with any, most real estate agents, right? You can't really get away from the single family stuff or, the kind of, generic sale. But yeah, I'd say me personally, I've completely niched into the investment side. This has been a few years now, but I still deal with my network at a high level with, helping people get into larger homes or downsizing, whatever the case is. And now at the brokerage level, where, my goal here is to, further educate the rest of our agents outside of our sales team to, try to take on the investment world. I always say in Hamilton, it's whether you like it or not, you're going to have to be involved in the investment scene, right? It's just, it's so deep rooted here that it's unavoidable, which is, to me, it's a beautiful thing, and being able from the agent side to create that repeat business with those type of clients. So, but we deal with, on the investment side, anywhere from duplexes and up into 20 plus unit buildings. So we definitely, and on the mixed use side too, on the commercial side. So we definitely cover quite an array of different asset classes for sure.
Love that.
Yeah. So yeah, like we always start, we're with Revel, Hamilton Central. So we run the sales team as well as the brokerage side. So always busy here in the office. And this is the chart that I always start off with. We always talk about median just to give, a more concise look at things and eliminate outliers, et cetera. But now what we wanted to do here essentially was, if you look at the end of 2019 there, right? It was very, very consistent, kind of your average 3 to 5% appreciation, as we saw in balanced markets for however long here in Hamilton. So essentially right before we cross into 2020, median price, this is all for freehold, so eliminates anything condo related. We were at 534,100. Fast forward to the end of 2022, and we are still up 27%. So just kind of wanted to, we're the type of agents that we want to give you both sides of the coin and not just talk about prices going through the roof or prices going through the ground. I want to look at the meaty part of the whole picture, right? So, despite what people think, and obviously we have seen a huge regression from where the peak was, which looked like February of this year, where we did hit 7 figures. We've come down considerably, right? But again, if you're looking at, my apologies, if you're looking at, just the apples to apples difference there, we're still up big time, right? So, and not to say that, there aren't a ton of deals well below that median mark, but just give a different perspective on the numbers here in Hamilton with 2022 coming to a close.
I think that's so beneficial because ultimately a lot of people get their information from the news, and people end up believing that it's crashing, it's burning, it's just yeah. And I love being able to, and I this is so valuable to look at the data and see where things are at. Ultimately, yes, it's lower than the peak. Real estate is cyclical in nature. We all know that. We all know it's higher than it still was, and it will end up higher than it is now. We don't have a crystal ball, but if history repeats itself, that's what we'll be looking at some point.
Yeah, I'm sure, people know that you and I are biased with investments in real estate. Obviously, it's very hard to lose in that space. But yeah, it's a great way to put it, right? It's the media wants, we've been through the fear mongering for 2 years with COVID and whatnot, but, the media wants you to believe one thing, but, just speaking to a local agent really, really can further define what the actual market is saying, right? And translating that for the average consumer. So, And then just diving into more stats here, Adriana, in terms of this is kind of broken down into asset classes, right? Detached, semi-detached, row homes, apartments, and just showing there, we don't have to spend a great amount of time. Just, I know it's a very, it's a raw maze of data there, but just, if we look at December itself, if you look under the sales portion, actual versus year over year, we're still down a tremendous amount. That's been consistent, right, in the back half of, or at least 75% of 2022, right? So not a huge indication. It's, coming out of a scorching market where sales activity is absolutely through the roof, and after these interest rates absolutely doused the market, it's inevitable that you're going to get these kind of negative numbers, right? So, and then if you want to shift your focus to the middle of that chart, we're looking at days on market, months of supply, also known as the absorption rate. So detached there. So we're looking at 3.25 months in terms of inventory, or your absorption rate, meaning how long would the detached market in Hamilton take to sell without any influx of new inventory, right? So, but a couple of things I wanted to highlight there. You have the YTD as well in the bottom. Again, year over year on the sales side, not really, a huge difference between the monthly and the year to year or year over year. Days on market, you can see that, December obviously was the worst of the worst in terms of how long properties sat around, but overall we were pretty healthy in terms of days on market, right? This is the kind of stuff that we were used to prior, right? You list a house, obviously depending on the pricing strategy, and usually took, unless you have people still holding offers back then, despite what people really do know out there. And essentially a detached property took you 2.5 weeks to sell. Again, very normal. And that's pretty consistent down the actual column there. So, and again, just showing now, our final month of 2022, and look at it from a yearly angle as well. Despite the sales number being down dramatically, looking at the positives, that is a healthy market to take a couple weeks to sell a home, right? As opposed to flying off the shelves in 3 business days, like we witnessed there.
A little bit more balanced. Do you find that, or do you predict that it will pick up again? Because there's some seasonality that happens here too, with it being the end of the year, holiday season, January, February,
For sure.
not as much.
Yeah, for sure. Yeah, I think with investors, we definitely saw a slowdown, I would say, in the summer. Me, like as an agent, my November, Decembers are usually pretty busy. I know, like, especially this year, like there was a lot of conversations happening, and more actually like deal-driven conversations, where before it was a lot more planning. But our team had quite a few investors secure something near the end of the year. So yeah, you always take that with a grain of salt. So things slow down naturally. I think more so this year, just because unfortunately a lot of people in some tough spots with cost of living and whatnot. I think that was kind of the one further element that added to the seasonality this year.
Yes. Do you find that sellers are adapting to the new market's prices, or are you still finding a lot of resistance?
I would say there's far more level-headed sellers out there. We'll put it that way. There are still a decent portion of the market where you're seeing people reduce over and over again, which is fine. Like, to me, it's when you sit down with the seller this day and age, and we go about it this way, that you always want to give people a few different strategies, right? Like, the whole concept of like chasing the market, right? And overpricing it by a touch to see, maybe there's just a really there's a perfect buyer out there for that property that is seeing a little bit more value in the property than the rest of the market, right? So, but I think all in all, like as we script around it, we make sure that we go in there and we're not essentially buying listings, meaning we're just signing it at a price that doesn't exist in this market anymore. But I think, yeah, in relation to call it the beginning of the fall, I would say you're seeing a lot more homes selling a little quicker. Seeing that the seller is starting at a market reflected price for sure.
Awesome. We find that in the multifamily space, it's been interesting process to watch the sellers adjust. They are adjusting. It takes a minute. I think on the multifamily side, there's a slight delay
There is
with everything that happens on the residential side, but we're starting to see more and more, not only opportunities, but creative sales being done as well.
For sure. Yeah. So we're going to get into a recent deal that we did there and kind of talk about the creative elements with the multifam space. But yeah, you're right. Hit the nail right on the head, Adriana, in terms of there is a delay, right? And even more so, they're financing such a giant component of that, right? And commercial rates have gone up just like, the rest of the world, right? So obviously a lot more VTBs are coming into play and more creative approaches, right? So, but we're looking forward to jump into that deal later on in the presentation. And we've been showing this chart the last couple episodes, kind of just like a screenshot of all that more intricate data that we just went through. So this is December sales year over year down considerable amount. Inventory the other way. Months of supply, we touched on that, basically almost 3.5 months there. And the average days on market in December was definitely on the higher end, across the 1 month mark. So just to give everybody kind of an overall look at what we just discussed. And then this time we actually broke Hamilton down by neighborhood, essentially. These are more general neighborhoods. You're not seeing like, the Normanhurst and the Rosedales. Like this is collaborative, Hamilton Center divided into 5 portions, Hamilton West into 3, so on and so forth there with the East Side. So the reason why we kind of wanted to highlight this was just to show the viewers the entry points per neighborhood, right? And if it's like, hey, obviously you're going to have a very detailed conversation with your realtor, whomever's helping you, to talk about getting you qualified at X and getting you into a neighborhood that obviously reflects that budget. This is kind of just broken down into where those price points lie. December, average price there on the mountain, you can see, collectively higher than your Hamilton East centers and West. I was actually pretty surprised to see the actuals on the average price points for 10, 11, and 12 there. Mind you, it is vastly more single family than your investment style property. So that definitely has a lot to do with it. But again, just, there are some neighborhoods here that just certainly wouldn't qualify on the investment side unless you get into land play and larger buildings like Flamborough, Dundas, Ancaster, and then the 51, 52 codes for Stony Creek. So, where you see the most opportunity for 3+ units is in Hamilton Center. In December, you were seeing, they're 4 out of the 5 codes in the Hamilton Center were around the $500,000 mark, right? So to me, it's a beautiful price point to get involved with, right? And especially with more entry-level investors. So just wanted to kind of highlight a few points there.
Yeah, I totally agree with the location-wise here. A lot of our properties are near downtown center, Prince William, King, Maine. That's really where we saw the opportunity from day one. Again, the ability to rezone to change, convert into multiple units makes it so much easier to add that value and the price points. I mean, the latest one we did was a triplex conversion. We purchased it for $490, refinanced it at $800 once we were done. So we did a few of those. They were very, very exciting.
Yeah, no, that's awesome. Yeah, like we said, like the 2.5 stories are great downtown. There aren't many that you can get 3 units out of, and all the new zoning codes that we'll dive back into, and just trying to reiterate that. But I know even when you said 2018, right, Adriana, you bought 557 King.
Yes.
Right. So that was a TOC zoning.
Yes.
Yeah. So I know that transit corridor is great. That was kind of like the first wave of new zoning that allowed for you not to lose your
density.
Yeah. Density, and to do it without deep-rooted red tape, right? So right. I remember vividly when that zoning came out, and like things, a sign of things to come, and Hamilton's kind of kept that trajectory. So and then we're just to keep on the stats train here. So rents here, again, like Adriana said, seasonality always a factor, especially in the rental market. And people basically, getting into a new unit well in advance of mid to late December. But we did scan through kind of the whole year, again, showing you guys where rents were at the end of 2019 versus now, but just to show you where rents are now on a 1, 2, and 3 bed, right? These are the numbers you will be using for every single one of your conversions, right? Whether tri, quad, getting into buildings. Also, when you get into the commercial res, you're using different comps because of the way the unit's positioned. But to me, it's crazy where you have to pay for in Hamilton to get into even a standard 1 bed here, right? So there's still a lot of opportunity out there. Obviously, the short term, medium term rental scene has fully entered Hamilton. So there's a lot of creative ways and that we advise clients now, knowing what these AirDNA numbers look like with some of our Airbnb clients / partners that we have in our network. So again, this is just to give you, a clear shot of what it looks like with the bed count. But I would definitely, especially in this market and where that landscape is going, to kind of think outside the box a bit. And I've seen a bunch of multis in the last few months where they've chopped them up into long term and short term, right? So it really gives you that balance, depending on what the scenario is and where you're trying to capture the most rent. So, but that's just kind of an easy graph to digest there.
Yeah, I love it. It's, right on the dot, in my experience, obviously. And I remember when we bought it back in 2018, the pace by which the rents were increasing were insane. Like a tenant would exit for whatever reason, like even 6 months later, the rent would go up $300-$500. And it was insanity how fast it was growing. It felt like stabilized a little bit over the last year on our end, but we're renting 1 + 10 bedrooms for $750 plus utilities. Average 2 bedrooms, 2,000, 1 bedrooms, somewhere between 13. If it's a basement, 14, 15. So for other units. So yeah, crazy.
Yeah, it's the year over year was crazy for sure. But I'll definitely agree, and to elaborate on that point, Adriana, in terms of like stabilization, again with the tenants and landlords that we deal with, seasonality aside, in my personal opinion, a little bit of downward pressure on rent, I would say. Nothing extravagant where it would throw off the trajectory of your ROI on most deals. But I think just kind of people, just because we're into it every day, and we've started the year filling a lot of units for clients that have buttoned up their investment here. So we're just to kind of give the viewers a sense of like it is taking longer to get, if you're the type of person that waits out for the AAA tenant, which I don't know why you wouldn't, despite obviously carrying costs being through the roof momentarily. It's taken longer. And we listed on our board, the Toronto board. We do have a partnership with someone that does the private side of it for us on Facebook Marketplace, Kijiji. So we do have all elements covered, and despite all the exposure, it's definitely you definitely see a bit of a slowdown in terms of how quickly they're occupied, and the quality of tenant. I mean, that's an arbitrary term. It could mean something different to everybody. Isn't on every application. So just kind of something to not panic about, but just to be more patient with.
Yeah, I feel like eventually every market reaches its peak too, of what I can charge for rent. Like, I definitely not complaining. It's just such a really healthy rent, but ultimately there's also a cap to how much people would be able to afford. So it's not necessarily a bad thing. It's just stabilizing as it should.
Exactly. Just like with the resale side, rents are going to do the same, right? We've been very fortunate to where as investors to where the rental market's topped out. And then we talked about this last time. So with the yellow belt, quote unquote, here in Hamilton, now it's all embedded in the zoning maps as well. So it's fully available on the Hamilton website. And in terms of what R1 and R1A allows for the former C&D zoning, we kept this slide in here just to kind of reiterate the fact that, where before it was, you were jumping through hoops, especially on the Mount where we do a lot of these conversions with the 1,000 square foot all brick bungalows, that you don't have to jump through hoops anymore. That's just what it comes down to, right? There's been elimination with parking requirements, and predating detached garages for ADUs as well. And this is just an incredible time in Hamilton to really sink your teeth into something that before could only have been a legal duplex. Like, there was basically no shot they were going to allow anything else. And now that Hamilton's, transitioned into this new intensification, it's an absolute great time to get into it, right? So these are larger projects, mind you, but again, we have different strategies that we look at in terms of budget with all clients, right? But there's something out there for everybody, and especially if you have that third unit capability, it's really an amazing way to scale that parcel much quicker than you could have without, again, spending an atrocious amount of money on the planning side. So just wanted
very exciting. That opens up a lot of opportunities. Absolutely.
Yeah, there's not many people that we take out that we don't advise that we should be looking at something that you can at least do a third unit on, right, to further stretch the initial purchase. So and then next few slides we'll go through an investment opportunity and some recent deals that we did before we finish off. So this one's in Hamilton on Weber Avenue, right in the Stinson neighborhood. Very multi-unit friendly. E-zoning, which allows for great density. If somebody was further interested and elaborate on the e-zoning, you can always drop a comment below, and we can reach out and have a conversation about what that allows. But straightforward, a couple thousand square feet. It's already set up into 2 units, allows for legal use, no problem. As well as, if you did have the creativity and the resources, using that loft as a small bachelor and turning that to a legal triplex, which e-zoning would allow. And again, going back, this is, falls under the Hamilton Center that we looked at earlier. So right there around the $500,000 mark. So nice, easy entry point. It's actually, we don't have any interior pictures, but again, can send them out to whomever wants a little bit more info. But it's not, even if you left it as is and just converted to a legal duplex, you wouldn't have to do an incredible amount of work. Everything's positioned. So, your electrical, your plumbing, rough-ins, all there, and you're just basically retrofitting it and meeting codes.
Yeah, I think these are pretty straightforward too. We did a few of these style.
Yeah, I would say that's probably something you're familiar with, right, Adriana, in terms of where you guys bought back in 2018. And then Orlando, this one our client picked up as well. Again, very straightforward legal duplex conversion, has the attached garage, huge lot, 65 by 100, definitely allows for a third unit. You can see the rents there. That's kind of like the going rate with these, 1,000 square foot, all bricks, 25 for a 3-bed, 2,000 in the basement. Even in a slower rental market, those will move faster than most units. Great area. This one's not on the mountain, but down in the lower Stony Creek. Beautiful neighborhood. So it's definitely a rare, but rare in a good way for sure. So we picked this one up. Client picked it up for just over $600,000.
I like it.
Yeah, it's a nice, straightforward for sure. So, and we haven't, I'm, in the spirit of touching on different asset classes. So, this one, clients of ours just put it under contract. This is actually an 18-unit building in Clinton, Ontario. It's about an hour and a bit north of London, Ontario. And these same clients had purchased something, a comparable building, a little bit more density in and around the London area. There's some big value out that way that we've learned, right? We're always looking in Hamilton, but we go where the deals are, right? So, but just happened that clients picked up X building, and then about an hour north of there, we were able to put this one under contract too. So it's 18 units. So purchase price, again, if you guys wanted a deep dive into the numbers, being on the commercial side, there's a lot to analyze. I'm sure, Adriana, this is, something you've seen a million times now, but, drop a comment below with the address name, and then we can reach out and go over what the internal workings of the analysis is. But great bed count, 12.2, 6 1s. Some capital improvements in windows, the roof, coin-operated laundry has some lift, and then you can see the parking situation there. So 24 spots. So that one's just going through the due diligence phase, but excited to see how it unfolds, and tons of lift in every unit through renovations and rent, and a very nice little pocket here in Clinton.
This type of property definitely is exciting to me. Yeah. Without diving into this specific property, what's the usual price per unit that you're seeing being traded at?
So in Hamilton, out that way, it's much different. You're probably looking in the mid ones there per unit. Just kind of taking those last two buildings into consideration. In Hamilton, it really does vary. There was, I know at the end of 2022, there was one that sold on Sanford South, basically Sanford and King, all 1-beds that traded for $150 a door. Client of ours picked one up too at the end of 2021, 6.2, 6.1, so that was 12 units. For $176 a door. So I think you're still for all ones, and you're looking at around the 150 mark, and then with the combinations 1, 2s, and 3s, you're up in the $170 range. I mean, this is with kind of like the more MLS side of things. There's, the off market stuff, obviously, and not obviously, but it does present some better deals, really depending on it and how the deal is structured, right? Which we know is a huge part of that space.
Not bad.
Not bad at all. Yeah. I remember even at the height of the market, some stuff that was like, that still needed quite a bit of TLC was trading well over 200 grand a door.
This is why I ended up in New Brunswick originally, was because the deals were just not there in Hamilton. It just got so crazy, unreasonable with the amount of work that needed to be done. Obviously, Ontario is also very strict on the landlord regulations.
Tell me about it.
Makes it a little bit more difficult and expensive to get things, like to get the building improvement that he needs. So this is part of what shifted us out east. But again, I always look in the markets that I invest in that I already know. Yeah,
for sure. Like, Hamilton's always home, and we have our finger on the pulse here. But again, we're not we're seasoned, been at it almost 10 years, and we don't with those type of assets we can't be putting yourself in a jam, right, and overextending. I mean, at the end of the day, it's numbers are numbers, right? Especially in the multifam space. If they don't work, they don't work. And I would say, in addition, just be wary and make sure you're doing your full due diligence on the lending side and your loan to value and what those terms look like, and your exit strategy, before you do pull the trigger on any of these larger assets. So, recent deal here, Adriana. The reason I want to highlight this, just for the the Hamiltonians there that know about the duplex conversions. This one's a 4-level backsplit versus your standard raised ranch. Why I like these, and now with 5-level back splits as well, with the new zoning, you're going to start to see triplex conversions, especially with the 5-level backs, especially on the larger side. I haven't seen one fully done just yet on the legal side, we'll say, but the space and the parameters definitely allow for it. But past client of ours picked this one up. So this one's actually a flip. Again, going back to now knowing fully well how you're positioned on the way in, on the way out, and those numbers are kind of in place, then we can, now it's definitely a little safer to get back into the flip space. So we'll update you guys on that when that comes to fruition. AmeriCorps developments. We always like to highlight these, for your more passive investor on the condo side. So they're running about $1,850 here for 1-beds, and upwards of $2,250, $2,300 for 2-bedroom units. Low condo fees. Again, guys, if you want further information, drop a line in the video. This is in a very highly sought after area, but just to give a different angle with those condo style investors as well. This is a new slide just to bring it all together with our trusted partners at 555 Construction Management and Deck Inc., who do all of our planning. We've come together and made this a very streamlined process for everyone. It's a very, very well-oiled process now, kind of going through a ton of these with the same 2 companies and hoping to do a few more this year. But if you guys ever needed, a consultation on the construction or the engineering side ahead of finalizing or firming up a deal, we can definitely get you guys in touch with the companies here. And then last but not least, always looking for some great agents out there to join the Revel Hamilton Central branch. A young boutique brokerage here in downtown Hamilton that's growing at a fast pace here. So, and that is it for me, my friend.
Amazing. This was so fun. Thanks for all the information and the value. How can people get a hold of you when they're looking for properties in Hamilton and areas?
Yeah. No, appreciate that, Adriana. So, we can be be found on Instagram, Majd Realty Group or Revel Hamilton Central, as well on Facebook with those two same business names, Majd Realty or MajdRealty.com. And my cell phone, I don't shy from giving it out, but it's 905-921-6253. If you ever wanted to, set up a consultation, even if, you weren't looking to buy this year or the year after, but just to help you get better positioned for when you are ready, we're always more than happy to help. So
amazing. Don't hesitate to reach out, because so much value here, so much experience getting investors through the doors. It is opportunity to buy right now. So taking advantage of that. I love it. On my end, I'm Adriana Ostapenko. You can find me on Instagram or Facebook at Adriana Ostapenko. Check out my website at a-properties.com. And it was such a real big pleasure. And I guess I'll see you in the next market update at the Canadian Real Estate Channel.
Yeah, awesome. Thanks so much. Appreciate it.